Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman here with Dylan LeClair, Director of Bitcoin Strategy at Metaplanet.
Honored to be here.
Thanks for the time. You want to dive into Metaplanet, what's going on, deep dive, and we'll kind of fill around it?
Let's do it. Where do we start?
You want to start at the beginning?
Sure, we'll keep it. Yeah, I'll give a quick rundown. Well, I joined Metaplanet in May of 24. Metaplanet's Bitcoin journey started a couple weeks earlier. But it was kind of a zombie on the Tokyo Stock Exchange, commercial real estate, Pan-Asian commercial real estate company in its past life. COVID was a devastating moment. And so kind of sold all the assets, consolidated the debt, and was left with basically, one hotel property, a bunch of tax losses, and, lacking a strategy, really. And so the details on how, I joined Metaplanet aren't really all that important, but I think, safe to say, after I joined the team, it was kind of full bore ahead on, how do we replicate the success or strategy of, what Saylor and Microstrategy had done. So we put out a maximalist manifesto on the Tokyo Stock Exchange in English and Japanese and said hey, this is our plan. We're going to issue equity. We're going to issue debt. We're going to take any cash the hotel generates and buy Bitcoin, even if it's not that meaningful. And it was sort of radical because it was like a maximalist manifesto. It's like Saylor GPT wrote it up. And, I think in Japan, not only has that not been done or said before, but if it has been said or done, it's like Web3 digital asset agnostic versus we were no, we're Bitcoin first, we're Bitcoin only, very strongly worded. So, the market seemed to like it. But we were still, it wasn't, we weren't really at a scale. I think in July at the Bitcoin conference, I had a panel or two and we were up there with the CFO of Microstrategy and Eric Semler of Semler Scientific. And, we were kind of only had like 10 or $20 million of Bitcoin, which is a lot of money for an individual. But for, when they're sitting next to, a company with $45 billion of Bitcoin or whatever they had at the time, maybe like 20, it was a little, not intimidating, but it was like, yeah, well, we got to earn our keep, I guess. And so we did a rights issue, which is pretty uncommon. Rights issues are, usually struggling companies, companies that need to consolidate debt. It's a dilutive move. So shareholders, a strong company never does a rights issue. And so what we did is, we said, every shareholder can buy an additional share at a discount to the market. And you would think theoretically the stock was at 600, and we said, you have a right at 555 yen. Theoretically, the stock should have gone down. That's what the efficient market hypothesis says. And then, the rights issue price is here, or the stock's here, the rights price is here. It should go into the middle. That's what the efficient market hypothesis would say. And our stock went limit up for like 3 days in a row. And so I think that was a moment where it was only to raise $70 million, but our market cap was 80 million. So I think that was clear that the market had an appetite for Bitcoin in a market where there is no Bitcoin exposure. So there's no ETFs, there's miners, no Coinbase, no MicroStrategy, no proxies whatsoever.
No naked shorting?
Well, I think there are shorts. I don't know about naked shorting, but that was part of the original thesis was like, hey, we have an opportunity here. I think our situation wouldn't have worked or not worked as well if we were in the US or in a market that has already, been saturated by, Bitcoin exposure. But for us, it was a very unique point in time, and we acknowledged that. We even said that in the, disclosures about, hey, why is there an opportunity here for us as an operating company? So we raised 70 million through the rights issue. All of a sudden, we had kind of an asset base. So then it was, okay, now that we have communicated to the market what our strategy is, we've, purchased Bitcoin 10 or 15 times, what's the next step? And I think that, it was, how do we kind of get, an ongoing sort of like ATM style equity issuance? The problem was we don't have one of those in Japan. There's no, the American capital markets are very advanced and friendly versus Japan, are not. So for us, it was kind of about, finding out how to finally, get something where we could be, accreting Bitcoin every trading day, especially at the valuations that, Metaplanet traded to. So we just kind of got there. That was this past week. Our quasi ATM went live. We announced a 21 million plan is what we titled it, but it's, to issue 21 million shares of, it's not an ATM, but they're called moving strike warrants. And so it's the same effect, but it's been perceived very well. So I think, it started at a $14 million market cap, approximately, and now it's like 1.6 billion. And so I think it's still, just the beginning of our journey. But there's a lot of really passionate Bitcoin investors, Bitcoiners in Japan and Tokyo, and they've kind of rallied behind our story. So it's been a whirlwind of a 10 months, but I think it's still just the beginning for us.
Can you walk us through the moving strike warrants a little bit for anyone that might not be familiar?
Yeah. So to basically reverse engineer the ATM facility, because in the US, you can be a $100 million company and you could say, we're going to issue up to $10 billion of stock. And as long as you have the authorized shares to do so, you can issue any amount of shares you want into the market at any time. You have like full discretion, basically. And the bankers take their, 1 to 2 or 3% fee or whatever it is. But, it's one filing and done. For us in Japan, you can't do that. We can't just say, hey, we're going to issue 1 trillion yen of equity. You can't do that. But what you can do is the literal translation is stock acquisition rights. It's basically their warrants. We can issue warrants that have all sorts of provisions or clauses. So what we did is we decided this recent deal, the 21 million plan, we issued 21 million shares of moving strike warrants, and the exercise price of those warrants adjusts to the previous day's close, 100% of the previous day's close. So it's zero discount. And so how does it work? Well, let's say the previous day's close was 100 and the market goes to 101. Well, our counterparty, Evo, who's an investment bank in Japan, can sell shares at 101 and exercise on that same day at the previous day's close at 100. So what they do is our largest shareholder gives Evo shares, lends them. Evo is then shorting into the market. I wouldn't say it's naked shorting, but they're shorting into the market, and then they exercise the shares to net up. The Metaplanet gets the cash. We buy Bitcoin. Evo covers their short position. New shares have entered circulation. It's a roundabout, reverse engineered way to do an ATM without having an ATM facility available to us. The beauty of it is, and it took some time to kind of communicate to our shareholders. We've done 2 moving strike warrant deals. The first one was 2.9 million shares, and we issued it, and we issued it 50% out of the money to start. So our shares we were trading at like 2,100. We said the initial exercise price is 32.88, 50% higher than the market, because we have a 2-week delay baked in. We don't want it. It's just that's the rules and regulations. So we can kind of strike this initial exercise price wherever we want. So we striked it high. We striked it 50% out of the money. And we announced this dilution round it was about 8% of shares outstanding. And it was a 3% discount moving strike once it starts to move. And the market after hours kind of tanked. People, because in Japan, moving strike warrants, it's a dilutive action. Weak companies do it, and usually the discount is 8 to 10%. Meaning the financer, market goes up, down, or sideways, they're making 8% spread. They're making a 10% spread. It's a great business to make 8% risk free. For us, the discount was a bit tighter, but it was also explaining to our shareholders, like, we're buying Bitcoin or the proceeds, Bitcoin per share is increasing. So what happened was we announced this 8% dilution. The market in the span of less than 2 weeks ripped 50% higher, and we executed, it was a 6-month plan or a 6-month time frame. We executed it in about 10 trading days, to raise $60 million. So we kind of circled up again and said, okay, and internally decided let's go bigger. The market knows what we're going to do. We've communicated our plan, so let's do 21 million shares. The symbolism aside, that's about a 55% dilution round. So we said, this is a 2-year plan. We're going to do it incrementally, but the discounts can be 0%. And which, you might ask, how can it be 0%? The reason is, and most stocks are 8 to 10. The reason that you can do 0 is because of volatility.
Mm-hmm.
So the interesting idea is that, everybody, especially like not everybody, but the Bitcoin MicroStrategy, hive mind now understands volatility is vitality. Saylor just borrowed $2 billion at 0 due in 2030. How? Well, it's a convertible bond and that equity option is very valuable. For us, we haven't issued any convertible bonds, but we've issued equity at the market. And we had the cheapest equity financing of anyone in Japan. The moving strike warrant deal we announced was tied for the lowest discount ever, 0. And it was also the largest moving strike warrant deal in Japanese capital market history when we announced it. And it's the idea is that our common stock is so volatile, partially because we have a Bitcoin balance sheet and partially because people like to trade. It's very liquid. It's relatively small at $1.5 billion. It was smaller. And so because how much would you pay, Tim, for a 2-year moving strike warrant on MicroStrategy? You can buy MicroStrategy at the previous day's close every single day, right? And so like when MicroStrategy's up 8%, there's a big profit opportunity for you. But for us, it's like we're going to use that volatility to raise capital. And on favorable terms. And so I think we announced this 50% dilution round. We have a 2-week waiting period. Our stock was 4,000. We said our initial exercise price is 55.55. And in 2 trading days, since it's gone live this week on Monday, we've raised $20 million at 6,000 yen per share on average. It's every time we've raised equity, we've done it a few times. The first initial exercise price was 200, and then we raised 100% of shares outstanding at 555. Then we raised 8% of shares outstanding at 3,200, and now we just diluted a few percentage points at 6,000 yen. So every time we've raised equity, it's been at a higher price, and we've accreted. We've put all of it into Bitcoin. I kind of gave you a whole lot of details there, but the moving strike warrants, there's a lot going on, but really fundamentally what it is just our version of an ATM, where we don't have one.
Got it. Is there anything to the culture in Japan and there not being as much shorting activity in the market, or is that not really a thing? And then if you want to touch on just like American versus Japanese culture in general, or just anything interesting that you've kind of seen a theme of, or just takeaways from, being both here and there a little bit.
So, it's interesting because it's obviously my first, experience with working at a public company. It's a unique experience I'm treasuring, but, the idea of short sellers, it's kind of like this, like those darn short sellers, but I think for us, and I saw Michael Saylor say something along these lines, I don't know how many months ago. For us, it's almost like, well, okay, they're short now, but you're a future buyer. So for us, it's like, well, the good news is like, part of our Bitcoin Treasury operations is raising capital in the market. To do that, like, if there's a seller, you need a buyer. So if people want to short Metaplanet to buy Bitcoin, then, great, like, cause you're a future buyer later. There's plenty of people that short this stock. There's, I think Morgan Stanley at one point, and who knows who it is. I think there's a bunch of entities behind this, but Bloomberg had Morgan Stanley short like 5% of our shares outstanding a couple of weeks ago. I'm not sure what it is now, but there's the beauty of Metaplanet compared to Bitcoin for a Japanese retail investor or investor generally, as a public operating company, is that Japan, everybody has a brokerage account in Japan, and it's marginable. So there's a lot of people that love day trading in Japan. Like everybody has a brokerage account, everybody day trades. Never mind the fact that there's a tax difference. So crypto is treated as ordinary income. Bitcoin, crypto. So if you buy or sell Bitcoin and you make a lot of money in Japan, you pay 55% tax. If everyone has the same tax rate, long-term and short-term capital gains is 20% for listed companies. So there's a tax arbitrage. The second is that as an operating company where it's marginable. So most people that are day trading Metaplanet or day trading Japanese stocks have a portfolio of stocks, and they're not selling and buying with cash. They just have a credit balance, and they're borrowing yen at like 50 basis points, and they're just buying or selling or day trading in and out. So I think for Metaplanet in particular, we started with a retail base. I mean, when I joined the company, we were trading at 25 yen, which is one yen is a tick. So a move up or down one tick, 24, 25, 26, it's like 4%. So the stock wasn't even trading. So we did a reverse split early on, but a lot of our retail investors were upset because part of the earliest investors of Metaplanet were the people that would go all the way down the board and find the cheapest stocks in Japan to buy. And part of that is, funny enough, I learned this. In Japan, there's shareholder benefits. So what people would do is they would just go and and there's people that just buy every single stock, or not everyone because there's a lot, but they buy like almost all of the stocks they can, or all the cheap stocks they can, to get just the shareholder benefits. Mm-hmm. And so when we did a reverse split, some shareholders were upset, but it was more so for us. We made the decision to just, it was just to improve trading liquidity. 4% up or down on a tick is just not feasible. So, the good news is, I think, I don't know about what the actual record is, but we just announced a stock split. So we're reversing the reverse split in the matter of, I think, 7 months. But I think really it's to go back to your original question on the culture. I love Japanese culture, and I'm still, very, very new. I've only been there for a few weeks. I'm spending the month of March there. But I think the interesting thing for us and why people are so fascinated with what Metaplanet is doing is that it's like a very conservative culture. What we're doing is perceived to be very, kind of gung ho, like risky, speculative, and there's a lot of people that speculate or, take on a risky bet. But I think the conviction at which, Metaplanet is coming out and saying Bitcoin only, no crypto. Like, we've had a lot of people come up to us and say, well, exchange here or this custody here, like you should do this, or, oh, like you can take your Bitcoin, you can stake it and you can get a crypto, like, why wouldn't you? It's free money, and it's like, oh, well, maybe we're leaving money off the table, but that's just kind of dilutes our message. So I think, the culture is interesting. I don't speak Japanese. I wish I did. It would make my job a bit easier. But, I think that it's and this is part of the reason we picked up Bitcoin Magazine Japan with the license, was because we realized all of a sudden, we have 20,000 rabid, excited shareholders that love Bitcoin that have never had an avenue to express their excitement for the asset. Because, there's the Mt. Gox history, which kind of scarred everybody and left it like in a regulatory sort of like gray zone for forever, basically. And that kind of stunted a lot of like not the innovation. There's still exchanges there and crypto companies, but in terms of, the Bitcoin culture or, the business Bitcoin culture that we have maybe in the United States, it's just, that didn't really exist. So when we kind of announced this in April, all of a sudden there was, thousands of Japanese retail investors that were like utterly fascinated with what we were doing because it was just so foreign. There was no one had done such a thing. So, I think we're really excited, by the reaction, when we did the rights issue. So we had to do it analog. Sometimes in the US, if you do a rights issue, a right just shows up in your brokerage account. Mm-hmm. And there's an option for that in Japan, but for a variety of reasons, we couldn't do it that way. So we mailed out like 15, not us, we hired a firm. We mailed out like 15,000 manila envelopes with documents, for this rights issue. And we had 13,600 retail shareholders.
Wow.
Receive documents in the mail, fill them out, sign it, send it back to us, wire money to a unique bank account, and then Metaplanet issued them shares. And they did that, and anybody that exercised those rights, they've now 11x'd on their investment. And so all those shareholders, the 13,000 people that took their rights, that exercised their rights, like are diehard Bitcoin and Metaplanet fans now. So I think it's interesting because like I've had probably 10 or 20 examples of people that have been orange pilled from Metaplanet. Like they because part of our early retail base was not Bitcoin even fans. It was just people that they go to the top trending lists of Japan or like the daily movers, the daily active traders, and they trade anything, And there was a period, for a couple of weeks in the summer where Metaplanet was on the top trending like of the Yahoo Finance web board, people just day traders, speculators, punters every single day. And so, which was interesting because we kind of expected like, oh, it's just gonna be all Bitcoiners or Bitcoin, family offices or whatever that were gonna be investors. What we found was it was actually a lot of just stock traders now are like have taken the orange pill because we're buying Bitcoin every week and we're never selling it, and we're saying we're never selling it. So that was a kind of a unique thing I didn't foresee, but it's certainly welcomed, and it's been cool to receive all the feedback.
Can you walk us through what the partnership with Bitcoin Magazine and Metaplanet, like what is it? How does it work? What is it?
Well, yeah, I mean it started in the summer. It was really that, we all of a sudden were, we had all this engagement and inbound, and, we realized that, there was no like Bitcoin maximalism as a ethos. Not didn't exist, but the first time I ever went to Tokyo, Wiz from mempool.space graciously had us over, and we had a little mini meetup, quote unquote, and it was like 18 of us, and we had a bunch of steak and had a drink or two, and Wiz jokingly was like, welcome, these are all the Bitcoiners in Tokyo. And we're like, wait, what? And it was it was tongue in cheek, he was joking, but it's much more so like a Web3 crypto culture, which is fine. But I think for whatever reason, like not government sponsored, but there was like more of a kind of a push towards general crypto agnosticism versus maybe in the US, you're starting to see more of like a Bitcoin friendly, not regulation, but cabinet or government. And so for us, I think it was like, well, we have a big opportunity here. In the US or internationally, Bitcoin Magazine is known as like, the Bitcoin only media outlet, the Bitcoin first media outlet. And I think it was kind of a no-brainer for us to say, well, we already there's an established brand here. We talked with them and we entered a just a kind of a content license agreement sort of thing. So now we have Bitcoin Magazine Japan set up. We have a few employees, of which I did all the interview process for. It's more so, I think for Bitcoin Magazine, Metaplanet views it as not like, we're not looking at like a monthly P&L saying like, oh, well, guys, go sell more ads, guys. It's like more so like we want to onboard as many people in Japan as we can, to Bitcoin. And some of those people might buy Metaplanet stock, but that's not the intention. The intention is just like, all the things that, we've done in the US, conferences, multimedia, articles, Instagram, YouTube, political advocacy, education, academia, like all those things I think are things we want to be doing. So the Bitcoin Magazine license, agreement was just kind of like the first step in that process.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. So in Japan, can we take it like before Metaplanet versus present day? Like, what was the landscape of, like, you could buy Bitcoin on an exchange, but maybe that was it, and now you can buy Bitcoin on an exchange over there, and there's Metaplanet, but like, are there spot ETFs? Are there other ways to buy Bitcoin or other products or anything else built on it? Or like, what's the, I guess, landscape?
There's no ETFs. There's rumors that they may be approved, but as I understand it, it's kind of a slow moving. In general, the Japan likes to follow the US, so I wouldn't be surprised if ETFs are a when, not an if. I don't know the timeline there. But I think, even for us, how we think about it is like kind of, we look to MicroStrategy. Everybody said, the bears were saying, oh, well, the gig's up when the ETFs roll out for MicroStrategy. Well, no, the premium to NAV expanded when the ETFs rolled out, because it was sort of like, okay, institutional acceptance is here. Do you want to buy the company that's selling the Bitcoin or mining the Bitcoin, or do you want to buy the company that's buying the Bitcoin? Like, the ETFs roll out, BlackRock endorses it, it goes mainstream. Well, you buy the biggest Bitcoin company. And so for us, if the ETFs roll out, it's great. It's not people think that it's bad or a negative catalyst. I don't agree at all. In terms of, the avenues for exposure, you can buy it on a exchange if you're a retail customer. As an institution, there's not really an option. You can't just go buy Bitcoin on Bitflyer if you're a big institution. So it's really like you have to get access to an operating company. In the US, at least in 2020, I think it's kind of analogous to 2020 in a lot of ways. Japan now compared to the US back in 2020, maybe early 21, both from bigger picture monetary policy. The 30 years at like 1 and some change percent. The short rate is like close to zero. It's very similar to the US. The Bitcoin adoption curve, I think, is also trailing the US a bit. But also in terms of the ETF landscape or the investable landscape, like there's no miners. I guess there's miners in the US. There's now one operating company at a Bitcoin standard, Microstrategy, 2020, and Metaplanet. When Microstrategy started, they were $1 billion company with the first purchase was $250 million of Bitcoin. Metaplanet's now $1.5 billion with $200 million of Bitcoin. And so I think we're kind of in that early nascent phase. And, also there's not even GBTC. Like, GBTC was at least OTC listed. It was a closed-end fund. It traded at a premium. But like, if you wanted to buy a yard of GBTC, you could. You could go buy $1 billion of GBTC if you were a big hedge fund that wanted to speculate. You can't in Japan. A lot of, these institutions, you can buy US companies. But I think there's, similar to, why the largest, MSTR buyers, there's just trapped pools of capital that have a mandate. So like, even if there was an ETF, like some of the investors, MicroStrategy they can't buy IBIT. Like, you have to buy there's portfolios, you have to buy US listed tech, so it's like, what do you, if you love Bitcoin, what do you do? Like, buy MicroStrategy, Right. So I think for us, we've started to see, the first kind of phase transition for us from like predominantly retail to now retail plus institutional was this fall. So we got, into a couple international blockchain digital asset ETFs, CoinShares, and a few others. And then, it was like Capital Group, the Sovereign Wealth Fund of Norway, State Street, some of these like big investors, have started to passively allocate to Metaplanet. And I think that just goes to show that there's a product market fit for Bitcoin companies. And also, the idea of a Bitcoin Treasury company that can increase Bitcoin per share is something that now, a lot of people are starting to see as, it was sort of proof of concept, I think. And then 2024, MicroStrategy just knocked everyone's socks off in terms of the performance and the execution. So I think that, that's obviously provided, a lot of cover for us because we adopted the strategy in April, early May when I joined. And the MicroStrategy was still huge, and they still had 10 billion of Bitcoin, but the story's a lot different today than it was a year ago. So I think that's kind of where we are. Retail, they can buy Bitcoin, but because of Mt. Gox, there's a lot of hoops to jump through. And the institutional level, it's basically there are no options other than public companies.
And Metaplanet's still the only Bitcoin Treasury company in the entire country.
Yeah, so there's a couple companies that have a little bit of Bitcoin now. They announced it after we did, but this company Remix Point, they have Bitcoin, Ethereum, Doge, XRP, AVAX. So I think that, the beauty for us is like we're not buying anything else. We're not selling our Bitcoin. We're not trading it. We don't have a price target. And so I think that for a lot of people, it's very simple. And like we report BTC yield, right? And we tell our investors like, this is how we judge ourselves. If you want to use this to judge you or to judge us as an investable, asset, great. But like, this is how management is saying whether, is evaluating whether we're doing our job. And I think, there's a clear precedent for, what MicroStrategy has done. And so because of that, I think, people have been excited and we've executed, well so far. So yeah, there's no other proxies at the moment. And we would welcome it. It'd be good. It's good for everybody when another company or, institution or whoever adopts Bitcoin. But I think, there's kind of that like interesting sort of paradox where, the zombie companies are kind of the ones that are incentivized. Like if you have a business that's just printing cash and you have no sort of concern, or you don't need a second option. You don't need a plan B. Right. And so for us, I think it's we were in a unique position, and now we have kind of hit the scale where we can really start to accelerate. Versus, I think if you're a profitable company, you'll buy Bitcoin, but like we will dilute. Yeah, as much like as we don't. There's not a point where we're concerned about well, you don't want to take it too far, or we worry that's too much volatility or too much risk, or like no like that. This is the business. And if you don't like Bitcoin, you're not a Metaplanet shareholder. So I think that like to get to that point, it took us 10 months of communicating our strategy, 50 disclosures. There was a long time where every time we would go and we would have a disclosure to issue more equity to buy Bitcoin, and the TSC, the Tokyo Stock Exchange, would come back to us and say, well, you're a hotel company, so like, why are you doing this again?
Yeah.
Like what?
What's going on?
What's the gimmick?
Yeah.
And so finally we're like, okay, enough. And we wrote it up and we devised a new business line. And our new business line was Bitcoin Treasury operations. So and we disclosed it. So now every time the Tokyo Stock Exchange says, well, what's the point of this? We go, well, no, it's for our Bitcoin. It's our Bitcoin Treasury operations business line.
It's for this business line.
Yeah.
And they say, okay.
Yeah. And so they go, okay, that works out. But that was a long process. Like early on, it was, well, you say Bitcoin's a hedge against the yen. Can you explain what that means? And so, I created a table, and this is the compound growth rate, and here's the Sharpe ratios, and here are the drawdowns, and we acknowledge that this is risky, and like, it was a process, because there was also it was helpful for us that there was a precedent. Like I can only imagine the MicroStrategy lawyers and the whole investor relations team and whatnot, what they went through in the fall or summer of 2020 behind closed doors, right? Because for us, when they said, no, well, you can't do that or you can't do this, we said, well, yeah, we can. There's clear international precedent. Look at Tesla, MicroStrategy, Semler, yada, yada, et cetera, et cetera. So that was really helpful. But for that was a lot of back and forth, and now it's a smooth process. But early on there was like a lot of pushback. Like we diluted 100% of our shares outstanding in one round, and we put all of it into Bitcoin. And the people at the Tokyo Stock Exchange were like, "You guys have lost your mind. Like, what are you doing?" And in hindsight, it was a good move, but not that it took convincing, because if the shareholders want it and the board approves and like, this is a strategy that everyone at the shareholder meetings voted for, then we're going through with it. But the regulators, I think, just given the conservative culture, were a little uneasy at first. But since then it's been relatively smooth sailing.
Do you just simply say we're diluting, or do you find yourself saying catchphrases like accretive dilution? Because there's just like everyone on social media, more on the strategy side here in the US, where they're like losing their minds, like it's dilution, and just a lot of conversation about like, no, it's accretive dilution. It's accretive. We're buying Bitcoin and it's accretive, and just takes, I think, sometimes a few minutes for people to be like, oh, this is how it's working. Or was it just like, to your point, this is what everybody voted for, this is what you did, and then the results kind of spoke for themselves and you were off to the races?
Yeah, I mean, I don't know about the language, but I think it was honestly helpful that we had the shareholder base early on, and that it was like, the company was essentially stranded on a desert island with no other path. So it was like, okay, we're announcing the strategy. There's no, we don't have any other options. It's a $14 million company, that got ravaged during COVID. And then it was like, from there, it was like, well, if you're a shareholder at this point going on, like you want to be a part of this. So like, this is what we're going to do. We're going to issue equity. We're going to issue debt. We've done a couple bonds against the hotel. Most of our bonds have been with the same partner, Evo, who's doing these equity rounds. So we can kind of have this sort of elastic strategy where we can kind of front the Bitcoin purchases and issue debt, buy the Bitcoin, and then kind of slowly kind of extinguish that debt through these equity capital raises as we're buying more Bitcoin. But yeah, I mean, I think, I like the language accretive dilution, but I think it was really about, it was a couple weeks, a couple months of educating people on like, hey, look, like we're shareholders too. It's not like this is the interest of us and it's the interest of shareholders. And so, we're like, we hold the common shares, like, so if we're doing this, it's not like it's some scheme, like it's all transparent, and I think, I had a call with Sailor, in October, I think, and they had just adopted BTC yield. And he very strongly encouraged us to adopt BTC yield. And like, I mean, I won't delve into the details of the call, but I was like, all right, like we'll do it. And he's like, Dylan, like, just see what we did and copy paste it. I was like, yeah, okay, great. And I think that, going out and saying, okay, here's our common shares, here's our fully diluted shares outstanding, here's the Bitcoin we have, like quantitatively, here's how we performed. I mean, that level of transparency is pretty uncommon. Mm-hmm. And it's not to say that we pioneered it. No, we literally copied it from MicroStrategy, who goes above and beyond to be transparent and to, like, almost over the top, count the dilution rate. Like, they're counting the convertible bonds 1-to-1. They're not even accounting for the exercise price being higher than the current shares. They're just saying, nope, it's all common. It's all, put it all in one bucket, divided by the Bitcoin. That's our Bitcoin per share. This is our BTC yield. So I think the retail shareholder base, especially, and then, through ongoing discussions with our institutional investors, can really, come to understand and appreciate the idea that, hey, this is a base asset. We're evaluating our performance not on whether Bitcoin goes up or down. Like, our denominator is BTC. Like, that's what we're evaluating how we allocate capital. And if Bitcoin per share is going up, then we're doing our job, regardless of the exchange rate. And I think as time has gone on, there's been increased understanding and appreciation. And now, when we look on Twitter discussions, or if you go in the Yahoo Finance boards, where it was just kind of speculators chasing the biggest moving, the biggest mover. I think Metaplanet's gone limit up and limit down like 40 times in the past year, so the vol traders and the speculators loved it, right? Where it was just kind of the speculators 8 months ago. Now, you look at a post and everybody's talking about, how Bitcoin per share is going up and how, like, no, like the issuing equity, it benefits us. And so I think it's been a long process, but it's really cool to see kind of an investor base that hasn't seen something like this come to wrap their head around it, and kind of help spread the word and the message.
Can you explain the mechanics of limit up, limit down? Like, how much is that per day when you say it's gone limit up, limit down?
So if
times?
I need to look myself. If you're under 100 yen, your share price, limit up or limit down is plus or minus 30 yen. And then if it's above 100, if above 100 yen and then below 100 or 300 or 200, there's another limit, and there's another limit. And it basically, I would say it's approximately 15 to 25% depending on where you're trading. But yeah, it's in our early days there was periods where we had two or three limit up days in a row, and then after the Bitcoin conference in July, we get up and we talk in front of everybody, and I do a podcast with Peter McCormick and explain the strategy, and then we had 6 straight days the stock was down 18 to 20%. We went from post split 3,000 to 600 in the span of about a week and a half, like 80%. And we speed ran a Bitcoin cycle in about 2 weeks, and it was obviously a roller coaster. But I think that's part of the reason that I think the shareholder base was kind of hardened up, and we did another round, and we bought a bunch more Bitcoin. And, I think that volatility, as we thought about it and as we worked through it, and as we figured out like, okay, well, how do we go do something like an ATM? We came to realize, well, now we have the cheapest equity financing anywhere because of that wild roller coaster volatility. So where traditionally you was, not to say, 20% down days are fun. I don't think that's the norm. I think that was our nascent phase as we were $100 million market cap. Now we're much bigger, and I think there's a different liquidity profile and a maturing investor base. But all that to say, the volatility is something that we kind of want to embrace and want to leverage. Your question, limit down, limit up. Yeah, there's basically thresholds.
Got it.
And so I don't know what it is now. I think above 5,000, I think it's 1,000 plus or minus, which is like 20%, something like that. But you can look it up. It's on the Tokyo Stock Exchange details for anyone that's interested.
The Bitcoin for Corporations conference is coming to Orlando May 6th and 7th. Receive 20% off admission by going to microstrategy.com, selecting Bitcoin for Corporations, and using discount code KOTZ at checkout, and I'll see you there. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. What does your day-to-day look like with the time difference? Are you like up in the middle of the night working? Or I think a lot of people are just curious of what kind of some of the operations not behind the scenes, but just day-to-day might look like.
Yeah, I mean, I work during the day, but it's a 14-hour time gap. So right now the market opens at 7 p.m. Eastern. So I'm up late a lot. Yeah, I go to bed at 2 or 3 a.m. every morning. So it's okay. I mean, it's a fun opportunity. I wouldn't trade it for the world. So, but yeah, I'm somewhat of a night owl these days.
Got it.
Yeah.
So to make it a little bit easier when you're over there for a month.
Yeah. And I mean, I had never been to Japan before. I'd never been to Asia before this May. It's amazing. Everyone has to go. And I'm not speaking Metaplanet's book here. But if you do, we can hook you up with the team and maybe you can, see the office or something. But yeah, Tokyo is awesome. And I want to spend more time there. I'm just, it's a long flight.
Yeah. So kind of following the Bitcoin Treasury strategy playbook, Strategy has said their leverage ratio, they're comfortable up to like a 20 to 30% range. do you guys have a range, and does that change as you grow, or how do you think about that as far as Metaplanet, I believe, is more volatile. If volatility is vitality, like you're more volatile than strategy stock. So how do you think about that and weigh like the volatility and the leverage, I guess?
Yeah. I mean, I think just in terms of, our maturity, Microstrategy has a, bolstered balance sheet and a scale that we're not, frankly, no one's close to, but I think we're still in the equity phase of our journey. I think the idea is we build an equity base, that's multi-hundred million right now. We have about $200 million of Bitcoin. At 500 million or $1 billion of Bitcoin, I think that's when the kind of the fixed income security, securitizing Bitcoin in the fixed income world gets really interesting for us. And we've come out and said, like in our disclosures, we have a little table and we have the grids, and we say, here's our shares outstanding and options and convertible bond shares, and it's zeros all across the board. We don't have any converts yet. But we've said we're evaluating this, and I think in Japan there's a lot of zero coupon convertibles for companies that aren't volatile. There's a steel company that has zero coupon convertibles, right? Because of the interest rate environment. So I think we will have some interesting opportunities to do some cool stuff. But right now I think just where the market is, we're definitely in our kind of our equity phase. But that will change. I think, it's a bit interesting in Japan, right? Like the buyers of the MSTR convertibles are basically convertible bond arbitrageurs. There's I think a small amount, like maybe 20% of the investor base. I don't know about the latest round, but from as I understand it, about 20, maybe 15, 20% of the MSTR convert buyers bought it outright. I don't know about this round, but previously, where a super majority are the arb shops. So they buy the bond, they use the bonds as collateral, they short the stock, they put $1 billion in, but really they're only in for 500 million, right? Because they have the short exposure. Versus in Japan, when you issue a convertible bond, basically they split it up. So the hedge fund takes the option and then they sell the credit risk to a bank. So there's like a bit of a different kind of mechanics there. It's like, and so, I think just in terms of, being a serial convertible bond, issuer, there's, having a credit history and, relationships with these banks and whatever, like that's a process that, is, it happens in the US, but I think in the US there's kind of like a lot of kind of cowboy convert arb shops that will trade anything. Versus, I think it's more of kind of a, the market. You need a rapport, and you need to kind of have a relationship with these banks that are used to more like vanilla, very not boring businesses, but they're used to low vol, more of a straight bond component of the convertible, right? The MicroStrategy converts are like a ton of option value and straight bond value. Versus the Japan converts are like very much a straight bond with a small option that usually never means anything. So, we're excited to get active in that market, but I think right now, that's something probably that we'll evaluate in the future. I think the idea is we have our 21 million plan, similar to how Sailor and MSTR have their 21 billion of equity, 21 billion of fixed income. I think we want to get through our 21 million shares of equity, which would raise at the current market about $1 billion, before we start to get serious and look at stuff like preferred equity or convertible bonds.
There's been chatter about Metaplanet listing in the US, and of course until you announce something, I don't know how much you can really talk about that, but like, is that you're only currently in Japan, correct?
Correct. It's not a US listing. There's an we're trading OTCQX, so MTPLF, which is not a new security. An ADR is a new security. You register American Depository Receipt. So foreign issuers can trade in the US, listed on the NASDAQ. someone like a Nintendo or a Toyota, a Japanese stock that's listed in the US, and you register with the SEC. For OTC stocks, an OTCQX is the highest market on OTC, the most liquid. And you have, market makers versus like something like the pink sheets. You don't have any market makers. You can't see bid or asks. You're just kind of like, you're kind of just pissing into the wind if you place a market order on the pink sheets. OTCQX, there's market makers. It's our stock and trading in Tokyo is orders of magnitude more trading volume than the OTCQX listing, which I think is expected. But it's an option, but as of now, there's no announced plans. And I think, one of the things to think about for us is, whether there's a, material advantage to being, sort of on an island figuratively and literally in Japan versus, the $200 billion of Bitcoin exposure in the United States that is, trading on the NASDAQ. And so, for us, I think there's, somewhat of a unique advantage. There's a lot of people that have asked about the NASDAQ listing or about, a US listing in general. Something to explore, but there's no stated plans as of now.
So kind of zooming out a little bit, right now, Strategy is trading at, everyone loves mNAV. So like a 2x mNAV, and Metaplanet is it, correct me if I'm off a little bit, like an 8x mNAV. How do you, not even necessarily specific to Metaplanet, think about that multiple, especially if you would see an actual growth company adopt a leverage Bitcoin strategy? Is it too much to say that like a company could have an mNAV of like what you see with some of these US stocks where it's like 10, 20, 30, 50, 80x, and you're like, why is Home Depot at a 50x? I'm just making that up. But how do you think about that multiple, I guess, for just a Bitcoin treasury company that's leveraged Bitcoin? And then if you would actually introduce like a growth engine from an operating business behind that, if that makes sense.
Yeah. I think it's interesting. It was also, side point, pretty cool that Strategy came out with their dashboard and like officially recognized, mNAV as a metric, which is pretty cool because it's just a bunch of kid analysts that kind of came up with this sort of stuff.
Yeah.
But yeah, I think that it's markets trade on forward expectations. So everybody that hammered the drum that Amazon made no sense with a PE ratio of 300, in the 2000s, or Tesla, it's just like they were all wrong. Everyone's like, oh, well, MicroStrategy is 3x overvalued here in March of 2024. And then they bought 3 times the amount of Bitcoin they had, so I think like the market, I kind of view mNAV as like, it's this sort of, it's like this elastic kind of expectation band, and the market expands when there's a high demand or an expectation that a Bitcoin treasury company is going to buy a bunch of Bitcoin. In the same way that PE multiples expand when you expect a bunch of growth, right? Like valuations expand, right? If you're looking in the backwards mirror, how much did you earn last year? Well, the valuation makes no sense. It's like, oh well, your valuation makes no sense. Strategy, you only have X amount of Bitcoin, and Sailor says, yeah, X amount of Bitcoin for now, right? So for us, when we look at our sort of equity capital raises, our rights issue, we diluted at a discount to the market, but we diluted 100% of shares outstanding at a 3x mNAV, right? So like that was massively accretive to shareholders. The next equity round, we diluted 8% of shares outstanding. But we diluted 8% of shares outstanding at an mNAV of 7.5 or 8. So our Bitcoin per share went up 45%. The past couple of days, before this podcast, we were at the same price. The mNAV was 10, and now it's 8. It's not because the price went down. It's because we bought more Bitcoin. So I think there's, our quarterly target for BTC yield, some people think we're out of our mind crazy. We put out guidance for 2025, and our guidance is we expect BTC yield to be 35% a quarter. And so, that over a year is like, 300 something percent, which people might think that's crazy. But in Q4, our BTC yield was 308% in the quarter. Our Bitcoin per share went up 4x in Q4 of 2024. So for us, I think, the valuation is too high or, overvalued if you're looking in the backwards mirror. If you look at how much Bitcoin Metaplanet or Microstrategy or whatever Bitcoin Treasury owns 6 months from now, well, no, the valuation was just the market's forward expectations, and the market, not the market was right, but it was overvalued only with only looking in the rearview mirror. So I think it's mNAV is a function of a bunch of different things. It's a function of the market's expectations. It's a functions of execution, past execution of management, and also the market's future expectation of that execution. It's a function of other proxies, right? So I think if there were no Bitcoin, if there were no miners and Coinbase didn't exist, and I think the ETFs were a net benefit, but if there was no other Bitcoin treasury companies in the world, MicroStrategy at the margin would have a higher mNAV, right? If every company in the Tokyo Stock Exchange had Bitcoin on their balance sheet and was 100% on a Bitcoin standard, Metaplanet's mNAV would probably be lower.
Right.
But I think the market recognizes that we don't have another business other than Bitcoin. We have our Bitcoin Media, Bitcoin Magazine Japan. We have our Bitcoin Treasury operations, which is two-pronged. We have our capital market strategy. We're raising equity, we're raising debt. And then we also have an income generation strategy where we take 5 to 10% of the capital we raise, and we are in the options market, being a buyer of Bitcoin, but also earning revenue, earning premiums. And so I think it's also interesting that the mNAV debate, right? People like Ryan and Punter Jeff, were talking 9 months ago about, well, when FASB kicks in, the mNAV discussion and the PE multiples kind of just merge, right? For us, Japan has the option of fair value accounting. So we, not only earned an operating profit, but we had, $35-40 million of Bitcoin gains in Q4. So we come out in I think the market had no expectation or understanding that we had fair value accounting, and we posted a blowout earnings print for the year. And for Q4, it was like, if you look at the previous 10 years of Metaplanet earnings, it's like nothing, negative for like 7 years in a row. And then massive 2024. And it was like, well, on a PE ratio basis, trailing 12 months, Metaplanet's PE is like 20. That's a growth stock, right? So I think all of a sudden it was not investable. Like we had I don't know what the term is in Japanese, but there's for companies that aren't profitable, or for companies that have a lot of debt, or for companies that change their business, and there's basically like a big red flag. It's like a note of going concern is what the English translation is. And basically anybody that clicks on your stock basically says like, wait, this company, watch out, there's a going concern, right? And our auditor made us put that there. That's standard for the TSE company. And after we had an operating profit for 2024, that went away. So all of a sudden, we were no longer not investable, and we had operating profit and unrealized Bitcoin gains of 30-40 million. Like, for context, our market cap was $14 million in April. So like we had unrealized gains on our Bitcoin that was 2x the size of the company. So I think that the mNAV debate, there's, the traditional investor, like the people that are on Bloomberg, they don't even know how much Bitcoin we have. They just know that our total net assets went up 18x in a year. They're just looking out, you had $1 billion of assets in the start of the year, and now you have, assets less debt. Today we have 30 billion yen, right? So it's just like, I think that the mNAV discussion is kind of one that's like isolated to the small subset of Bitcoin investors, but it's a valid discussion to have. And I think how I view it, and I'm an investor in MicroStrategy, I view it as basically the expectation for future growth. and it's like when mNAV blows out to 3.5, Saylor's going to sell another 10 to $20 billion of equity. And that's good for shareholders, right? I'm going to sit back and I'm going to, I'm going to get more Bitcoin per share. So I think that's what, our shareholders are championing as well. I mean, that 8x, the idea is that goes down, not because our price goes down, not because the share price goes down, which may happen, but more so because we're accreting Bitcoin really, really fast. And we've seen that, right? When we did our last round, it was at 8, it went down to 6, bought some more Bitcoin, and the price of Bitcoin went up, our shares went up, went to 10, and now it's back down to 8 because we bought some more Bitcoin. So I think that if I was to imagine, a high growth Bitcoin Treasury company that bootstrapped from zero, you would see it, go to 8, 10, 12x mNAV, ratchet down to 4 to 2, do it again, right? And I think that that's, those oscillations are just, it's like a frequency. It's like vibration. It's volatility, right? It's like that's it's par for the course. But yeah, we look at it, right? And that's I think part of our our strategy as well was, we had opportunity at 2x or 3x or 4x or 5x to kill it and just massively dilute. And it was like, well, no, I think early stage we're under, we're at a 200 million valuation or 400 million valuation, or all of a sudden we're the 15th most traded stock in Japan on a random Tuesday. And it's like, well, what if we just instead of killing it and just hammering the market, what if we did this slowly? What if we diluted? And what if we put the dilution price 50% higher than the market is today? And so that was kind of our thinking there. And so far, it's worked out.
Can you talk a little bit about the mechanics, if you can, and the turnaround time of issuing shares and then buying Bitcoin? Because when you're buying a hotel and then you have to operate the hotel and you have to wait months or probably years or decades for the hotel price to appreciate. But with this, it's like a matter of weeks or days. It's really wild, from all these buzzwords, the flywheel or whatever. But like from that perspective, I guess whatever you can share operationally, and then bigger picture, like where does this go if it only takes a week or a couple of days to like basically go through this whole cycle?
Yeah, I think the concept of like an investment cycle is really interesting, because you're exactly right. A best case, you build a hotel from scratch. Like best case, the hotel is up and running, right? But like in terms of like ROI, it's 5 years, a decade plus, depending. It might never ROI, and there's a natural disaster or whatever. For us, the beauty of it is, and our reporting, like our KPI, like the investment cycle is a few days. And we're at I think we've announced like 25 Bitcoin purchases in a year. So like, what's that? Twice a month, right? And there's been a few times we've announced Bitcoin a couple of days. We raised some money, we bought some more. And I think I like Saylor's kind of like every Monday, right? I kind of like that approach. But for us, it's like, we raise capital, we receive it in a bank, send it, and we start buying Bitcoin right away. And so we're mostly buying Bitcoin every single day. But yeah, I think it's immediately quantifiable in terms of Bitcoin per share or BTC yield, whether the capital we raised was put to good use or not. And so I think that's the thing that's exciting for our investors, is because most of any of the things they've invested in are. And not that Metaplanet isn't a multi-year story, but it's a multi-year story that you can watch progress every day, every week, right? And so now that we have this basically open-ended ATM-esque sort of facility, moving strike warrants, We have it's 21 million shares in 5 tranches. Of those 5 tranches, the rule is in the Tokyo Stock Exchange, and by tranche I mean technically our filing was the 13th, 14th, 15th, 16th, 17th series of stock acquisition rights of 4.2 million shares each. We have to disclose a tenth of that. So every 420,000 shares that are issued into the market, we have to put a new disclosure out. So basically shareholders in real time can see how many shares are being sold, what was the price of those shares, and then, how much capital did we get? And then, they'll see in a disclosure in a day or 2 or a week away, how much Bitcoin did you buy? So it's like extremely transparent. But I think that for us, that's, something we want to lean into, right? So I think that's, that's interesting. I love numbers and I love, kind of all the charts and the math. So it's a ton of fun, right? We have all this data and we basically can look and say, well, hey, what do we do this week? And so, along those lines, I think BTC yield, but also, BTC gain are some, we've adopted BTC yield. I think stay tuned on the other KPIs because I think, that's kind of how we want to think of things. Like if net no dilution, how much Bitcoin did we acquire? I think that's a really, or, in the yen value, or in the strategy's case, the dollar value, what was accreted to shareholders this past week, this past month, this past quarter. And I think that's, it's a new form of, it's not new, nothing's new under the sun, but the idea of a Bitcoin standard is super, super foreign, right? Like, never mind a Bitcoin Treasury, but like, no, we're quantifying all of our investment in this hyper volatile internet money is an abstract concept for someone that, doesn't have a Bitcoin podcast and does 3 interviews a day. So yeah, I mean, that's the investment cycle and the idea that we can kind of rebase and do it again and on Monday we sold 14 million shares, $14 million of shares, and then on Tuesday we do it again, and it's like and we've already disclosed that. So I think that that sort of real time quantification and ROI doesn't exist anywhere else. There's not a comparison, and unlike a GameStop, which I think maybe has an interesting pivot ahead. Ryan Cohen's now following 2 people, Bitcoin Magazine and GameStop. But when GameStop issued equity, they killed the rally, right? There's a vol spike, there's a spike of trading volume, there's all this activity, the price moons, they dilute, it's dead. Versus strategy, there's a volume spike, there's a valuation spike, volatility, they dilute, and it compounds, the whole machine, right? It reinforces the strategy, it reinforces the thesis. So I think that's something that outside of our niche little circle is not really understood. But I think that changes. I think just the results speak for themselves. And eventually, you can't afford to not pay attention.
Bigger picture, how long, this is like an impossible question, how long do you think it is until the next Japanese Bitcoin leverage company comes about? Because you made the comparison to strategy in August of 2020. Now we're in February of 2025. Is it potentially 2, 3, 4 years from now? Do you think it's sooner than that?
So there's been a couple other companies. I think a company like a week or 2 ago said we're buying 1 billion yen of Bitcoin, which is like $5 or $6 million. I think there will be more of that. Just especially considering our size and we, like, when we first started, we authorized 250 million yen of Bitcoin purchases, aka like $1.5 million or something, right? So we started at a tiny minuscule scale. So I think there's a lot of like kind of the small cap companies in Japan are like, whoa, should we do this too? But the beauty, like, I think what was perceived initially as a real flaw or, a missing piece for us was like, whoa, you don't have an operation or a super valuable enterprise or conglomerate cash flow vehicle that is going to, power this, right? That was like, an inhibitor for us. And now it's like, no, like we're going full speed ahead. We've gone from, what was it? We've like tripled our shares outstanding in 10 months. Who who else is going to do that, right? And like I think one is like we were lucky enough that Simon Garovich has been kind of a passive follower of crypto broadly, but Bitcoin for years. I mean he's said openly he lost some Bitcoin on Mt. Gox. So he's been following Bitcoin for over a decade, and has a career at Goldman Sachs as an equity derivatives trader. Like went to Harvard for applied mathematics. Like super smart guy. I've obviously been obsessed and done nothing but Bitcoin for the past 5 years. So we had the and we're a small team. We have 8 employees, and that's at the holding company. The hotel has some, and Bitcoin Magazine has some. But because of that, I think we're all in. Like so I think another company will buy Bitcoin. There's going to be 50 companies that buy Bitcoin. But is there another company that goes 110% into Bitcoin Treasury operations as a business and is selling put options on Bitcoin to generate revenue? Maybe. But I don't really expect it, just given the kind of the conservative culture. But if it did happen, we would welcome it.
And then looking forward and maybe zooming out, not specific to Metaplanet, what do you see on the horizon for like financial services, products, layer 2, 3, 4, 7? Like where does all of this go? I mean, one of my favorite things is what can you do when you have the position that Strategy has, when you have the position that Metaplanet has? Well, at a certain point, you can do whatever you want. Yeah. But like, is there a more specific answer or things that you think are super obvious or overlooked, or just your thoughts?
Yeah, I mean, I think that 24 was a landmark year for Bitcoin, and institutional adoption. We've sort of wiped off every sort of left tail risk you could possibly imagine. The political risk is now gone as well, right? Which with that, maybe not so much Bitcoin, maybe crypto more broadly was that risk there, but just in general, there was a bit of a headwind that turned into a tailwind in November. And so like, where does this all go? I think, Bitcoin as a spot asset, never mind the ETFs, are, able to be used as collateral at every brokerage house, at every bank, at every financial institution in the world. And it'll be at the best rates, right? You can get an over collateralized Bitcoin loan at SOFR plus 50 basis points, in the same way that like, if you own $10 million of Apple stock, you can do the same thing, right? Like Bitcoin trades with the volatility of Mag 7, so like why should that be any different? And I don't think it is. So I think also there's going to be a massive amount of fixed income products, and that's fixed income in the traditional sense, like a convertible bond or preferred equity, but also the ETFs rolled out just a couple months ago or the options rolled out on the ETFs just a few months ago. So something like MSTY, which is selling volatility. I think, Bitcoin income generating products where, okay, you are a baby boomer, you want a dividend. You can't just put all of your money or a lot of your net worth into Bitcoin because it doesn't generate income. Well, great. This will be a structured, covered call product that sells calls on the Bitcoin ETF and, gives you a dividend. Like all that sort of stuff, I think where it's the it's the bottom of the first inning. It's like that hasn't even happened yet. And so, some people might think that institutionalization and financialization is a bad thing. I think it was always the natural progression. And stuff like Bitcoin Treasury companies, fixed income products from Bitcoin Treasury companies, and then a huge suite of ETFs and structured products on top of Bitcoin, I think are a natural progression. And so with that, you'll be able to take your Bitcoin anywhere. You'll be able to there will be a world, and I think we're not that far from it, where like you can deposit Bitcoin into Fidelity, and you don't sell the Bitcoin, and you buy stocks, and you have $1 million of Bitcoin, and you can buy $500,000 of stocks without selling your Bitcoin, right? Like that Bitcoin is preceding collateral. There's no reason that shouldn't happen, and I think all the banks are now realizing that this, if they don't do this, they're going to be a big loser, and they're going to lose deposits, and they're going to lose customers, and that's why I think the FASB rule change SAB 121 is such a massive deal. Not that the banks can custody Bitcoin. in the US. So yeah, I mean, I think that, where we are, it's still super early. Like Bitcoin has gone from 0 to 100,000. But 100,000 to a million plus is driven by, 0.2% of the population that has all the money, right? Like they still don't have any Bitcoin. Like they have some Bitcoin, but like, do they have as much as a self-proclaimed Bitcoiner has, of their net worth in Bitcoin? Absolutely not. They have like a 50 basis point hedge, maybe at best. All the pensions and all, where all the capital is in the world, they like have just barely dipped their toe in. And so, going from a 50 basis point allocation to a 1% allocation is huge. Like, for a $100 trillion pool of capital, it's just like, and I think that's where we are. All of the left tail risks have been wiped off. Bitcoin is dead again and boring at 100,000. And, it's
hilarious.
and gold is, smashing new all-time highs every day. That's a strong signal in my view. And for me, I think the bear case has always been like the worst case. The bear case is like Bitcoin is a dumb digital rock that sits in your basement in a safe. And so like I view, and I say that jokingly, like tongue in cheek, I view my bear case as Bitcoin is just digital gold and it goes to the valuation of just gold. So if, gold is now repriced from a $10 trillion asset to a $18 trillion asset or whatever it is, like that's great because that's in my view, like the floor of where Bitcoin should be valued at. I think it's worth a lot more than that, frankly. But, I would say that's the worst outcome in the world. That's not my base case, far from it. But when I'm, talking to someone like a baby boomer or someone that's familiar with investing, I say, yeah, digital gold, that's worth a 15x from here or 10x from here. That's not too bad.
Yeah.
So
would you say it's fair to say that in 0 to 100,000, it's like retail, and now we're in like, you have retail, but you have corporates, you have institutional, you have nation states. Does that lead you to a thesis that it could be a longer live cycle, or we're outlawing bear markets, or like, what's your kind of hot take on like the 4-year cycle and how this might play out a little bit differently, and drawdowns, all that sort of thing?
Yeah, there's the 4-year cycle. That's an interesting topic, and we could probably talk for a couple hours on that. I think more so than ever, Bitcoin is intertwined with global liquidity. So, the next bear market in Bitcoin is going to be a bear market in stocks, and the S&P is going to be down 20% and Bitcoin is going to be down 35 or 40 or something. I think the asynchronous S&P 500 is at all-time highs. Bitcoin's 70% down is done. Mm-hmm. I think that's just the investor profile has changed. Are there still animal spirits, and will there still be a bunch of leverage at the peak and that gets flushed out, and will there be fraud, and yeah, probably. That's what happens when you have, immutable, uncensorable digital money, that things happen that you can't control. But I do view it as kind of a phase shift maturation that happened, starting in 2024. I don't think bear markets are outlawed, far from it. I wouldn't be surprised. I would say my base case is peak to trough, top tick, candle wick to bottom tick. Bitcoin probably draws down 60% at some point again. I to say that there's never gonna be another 50% drawdown again, I think is foolish. But that's fine, right? Because like even people that are like saying, well, it's down from this to here. It's like, well, no one bought all of their Bitcoin here and sold like, I think right. When Bitcoin, it was 2023 and Bitcoin was like 30 grand. And it was like, if you had DCA'd Bitcoin starting from the all-time high peak at 69,000 and it's now 30, you would outperform the S&P DCA. So it's like, yeah, like it's volatile, it's risky, but like volatility is the price you pay for returns. So I think maybe not 0 to 100,000 was retail, maybe 0 to 30 or 40, but I think more so now than ever, like retail is not a dominant driver of these flows. And not that they're irrelevant, but it's now the institutional and sovereign level. I think it really gets interesting when, Sailor's now 4 or 5 years in, right? They've taken 100 a $1 billion company, and now they have, 50 billion of assets, 40 billion, 45 billion of net equity for an 80 to $100 billion market cap. It's like the proof's in the pudding. Right? Like, never mind Metaplanet because it's too small to be relevant on a global scale. Like, put that aside. I think when you get another Sailor or two or three, like, that's already a billionaire. Maybe it's Ryan Cohen, who knows, and GameStop. But, once Druckenmiller and Paul Tudor Jones and, Steve Cohen and, whoever, like, once they, realize there is no alternative, that's when I think that's when Bitcoin goes and reprices significantly higher. Someone like a sovereign wealth fund of Abu Dhabi owning like $700 million of Bitcoin ETFs, like, that's their hot wallet, like, yeah. like that's their their third investment fund. And they have a little bit, like, if you have that much in the ETFs as a sovereign, you have billions upon billions upon billions of dollars in cold storage. And I think that there was rumors of that. The rumors I think are, directionally correct. And I think after the Trump win, there's multiple countries that haven't come out that are, actively buying and holding Bitcoin. So, that wasn't the case last cycle. Last cycle was more so than anyone would like to admit, driven by, yields, like Celsius and BlockFi and FTX and, like a bunch of rehypothecated Bitcoin, Three Arrows, GBTC. It was demand that was fake. It was synthetic. The buyers that are buying in a sovereign wealth fund, they don't buy to sell. Like, they buy the assets to hold forever. Mm-hmm. So I think that, that's just a different, we're just in a different phase of Bitcoin's maturation. That's a good thing. Because that's, this next phase, or the phase that we've entered, is where all the money is. Like the pensions and endowments and the sovereign wealth funds, like, they have all the money. And so, I think the real, the next kind of big idea, or to kind of piggyback on that, like, Bitcoin entering the fixed income world is something that I don't think anybody really appreciates the significance of. When Sailors, I don't think they've issued any at the market yet, but the Strike, STRK, preferred stock, like, preferred stock can be held on bank balance sheets, like as like high, like a tier 1 or tier 2 capital, so, like, this is something that and that's not Bitcoin directly, but, it's synthetic proxy based Bitcoin. Right. So, like, all this stuff, the 0% convertible bonds at $1 billion, $2 billion at a time, like, it's a scale that we've never seen before. And I think that it's been so successful that there will absolutely be copycats, of which Metaplanet is definitely one of them. And we hope to, 10x the scale again. And that's the goal. And I think we do it. But, we haven't seen but the incumbent legacy billionaire class, I think, is now just starting to appreciate, like, whoa, this thing didn't die. I've seen 4 of these 80% drawdowns. It's now back at 100,000. Okay, what's going on? Like, Yeah. And now that, we have ETFs on the options on the ETFs, right? Like, as an institution, you can go buy $400 million of Bitcoin, because you can put on, a full downside hedge efficiently. Like, the IBIT options chain is extremely liquid, right? Like, on any of the strikes for calls or put options. So, that was kind of all the things that didn't exist prior, right? Like, oh, you're going to buy GBTC, a closed end trust, at a premium that, like, you can't redeem. No, you're not going to do that. You're going to buy Bitcoin at Coinbase, as they're getting sued by the SEC. Like, no, you're not going to do that. And now it's a completely different game, right? Like, BlackRock's ETF is the most successful ETF of all time in terms of launch. So yeah, it's, I'm extremely bullish. But it still feels, I don't know where the cycle tops. I think it's kind of an irrelevant question, but I think the top, as we think about previous cycles, is like, okay, close up shop and go home for 3 years and come back. Like, I don't think that's how it plays out. I think, the top is like, it topped in March and we range for 6 months. Okay, we've topped at 108,000 and now we range for X amount of months. It's not like we top at 20,000, it goes to 3 and it takes 4.5 years before we see that same level. It's like, no. I think that's we're in a not a different world, but Bitcoin is in a different place these days.
Do you have any thoughts specifically on the U.S. sovereign wealth fund? It's something that the U.S. has never had. Bessent has said that he's not looking to put gold in there, which I guess makes sense to me. Like, why you don't need wrapped gold in a sovereign wealth fund? You already have it, hopefully in Fort Knox. But and then just more broadly, like just the entire landscape, strategic Bitcoin reserve at the state level, the federal level, like Bessent and Trump could go buy $40 billion of Bitcoin under the Exchange Stabilization Act if they really wanted to. But, we're hoping Congress is going to put, some recommendation, kind of get down the road. So does any of that stand out to you as like, just any thoughts on all of that?
Yeah, I mean, for those unfamiliar with Howard Lutnick, I would Google him and see what he thinks about Bitcoin.
Yeah.
Was that podcast in this room, by the way?
Yeah.
Pomp and Howard Lutnick had a conversation where, he said he owns hundreds of millions of dollars of Bitcoin, and I think he was speaking for Cantor at that point, and now he's stepped down, I think, officially from his role at Cantor, now that he's Commerce Secretary. But yeah, I mean, we'll see exactly what happens. I think the administration is supremely bullish on Bitcoin. And I think there's also more so than there was in the past, where it was more theoretical. There's, I think, and I don't have like any insider information. It's more just kind of what I can piece together and derive. I think there's an understanding from the intelligence community and the national security community that Bitcoin is extremely significant as a kind of a geostrategic asset. Never mind just from like a long-term kind of game theory perspective, but also just in terms of, we saw what happened in the Russia-Ukraine conflict. Russia gets basically debanked from the international system. That was a wake-up call for them. Basically sends a signal to every country like, hey, you're kind of at risk if you go against the U.S. of getting, basically your dollars seized from you. So that, I think that was a wake-up call. And then it's like, well, okay, Bitcoin's digital. It's obviously it's a big tech network, and it's, I don't think there's ever been a $2 trillion asset that's gone away. So I think, from that lens, there's a lot of, the national security. I would read Matthew Pines for anyone that hasn't. He has a lot of really interesting stuff, and he's a guy that's deep in the weeds and all this stuff in terms of like how people at the highest levels of government think. And I think Bitcoin is something that was kind of a funny toy, and now it's they realize like, okay, well, like Bitcoin can't go to $10 trillion without the U.S. winning. Like if that's a disastrous, never mind 10, 50 to $100 trillion without the U.S. being a big player here. So I think that's the right tail risk, right? Is like the U.S. is thinking that, China's thinking that, Russia's thinking that, Iran's thinking that, every country is thinking that worth their salt. When Trump's tweeting about Truth Social that we need all the Bitcoin mined in America, it's like, well, that's not how it works, but who cares? Like, it doesn't matter.
Right.
The comment I loved from Matthew Pines was like, he was like, do you realize, I was on a space with him, Matthew, this is back in like July or something. He's like, do you realize that like, he's like, cause this is what I do, Dylan. He's like, every intelligence agency on the planet had to write a memo to their boss about Trump saying he wants all the Bitcoin to be mined in America. Their overnight memo to their boss they had to detail about what the significance of that was. And it was like, I never thought of it like that, So just like that sort of rhetoric, like, hey, we want all the crypto capital in the US. We want all the innovators here. We want all the capital here. Like, I mean, that's significant. So, on exactly what it looks like on the sovereign wealth fund, on the strategic Bitcoin reserve, I do know there was a big last minute, attempt by the crypto, complex, if you will, to make it a digital asset reserve. I think that's dead. The question is whether, that takes the Bitcoin reserve with it. And I think it gets done in some form, whether that's holding the incumbent coins or not. But I think that, there's a lot of people at the highest levels of our government that recognize, understand, and want Bitcoin to win.
Super appreciate the time. I'll throw it over to you if there's anything that is burning in your mind that we didn't cover, any closing thoughts, and just where people can find you and Metaplanet online.
Yeah, no, I think that's we covered a lot. I don't even know how long we've been going. But yeah, this is it's been awesome. You can find me at on X, Dylan LeClair _ Metaplanet, Metaplanet _ JP. We post all the stuff we're doing on X. Yeah, it's been a lot of fun. We'll have to do this again sometime. Maybe I interview you. But yeah, Tim, I appreciate it. It's been awesome.
Thanks.
Cheers.